Asian share markets stumbled on Monday, May 16, and oil prices slid after shockingly weak data from China underlined the deep damage that lockdowns are doing to the world's second-largest economy. China's April retail sales plunged 11.1% on the year, almost twice the fall forecast, while industrial output dropped 2.9% when analysts had looked for a slight increase. The data paints a picture of a stalling economy and one in need of more aggressive stimulus and a rapid easing of COVID-19 restrictions, neither of which are likely to be forthcoming anytime soon, said Mr. Middlekateka, head of emerging markets strategy at TD Securities. China's weaker growth trajectory will add to pressure on its markets and fuel a further worsening in global economic prospects, weighing on risk assets. We expect further renminbi depreciation. In Europe, Eurostoxx 50 and FTSE futures both eased 0.3%. S&P 500 stock futures lost early gains to drop 0.6%, while Nasdaq futures fell 0.5%. Both are far from last year's highs, with the S&P having fallen for 6 straight weeks. China's central bank had also disappointed those hoping for a rate easing, though on Sunday, Beijing did allow a further cut in mortgage loan interest rates for some home buyers. Monday's data overshadowed news that Shanghai aimed to reopen broadly and allow normal life to resume from June 1. Chinese blue chips shed 0.8% in reaction, while commodity currencies took a knock led by the Australian dollar, which is often used as a liquid proxy for the renminbi. MSCI's broadest index of Asia-Pacific shares outside Japan lost early gains to stand flat, following a slight of 2.7% last week when it hit a 2-year low. Sky-high inflation and rising interest rates drove consumer confidence in the United States to sink to an 11-year low in early May and raised the stakes for April retail sales. Downgrading growth, a hyper-hawkish Federal Reserve has driven a sharp tightening in financial conditions, which led Goldman Sachs to cut its 2022 gross domestic product growth forecast to 2.4% from 2.6%. Growth in 2023 is now seen at 1.6% on an annual basis, down from 2.2%.